if you've been thinking about buying a home, but you're really worried about where you're going to come up with the money for your down payment and your closing costs, you're going to want to watch this video because Crystal and I are going to talk about some new programs that are out there for home buyers that can give you up to $7,500 and in some cases up to $15,000 for assistance with your down payment and closing costs. She's Crystal Austin with Lake Michigan Credit Union. I'm Brian Powers with the Homecraft Group at RE/MAX First. You know, Crystal, when we look at the three criteria that we use for home buyers to qualify for a mortgage, it's the credit score,
Yes.
it's the income, and then it's do they have the funds for down payment and closing costs. And usually if there's one thing that will trip up a potential home buyer, oftentimes it's the down payment and the closing cost. You and I get calls and emails all the time from people who are excited to go out there and buy a home. They've got good credit, they've got a good job, but they're just not there yet in terms of down payment and closing costs. So we got a great program out there called MSHDA, which can offer help and assistance to home buyers to give them some money for down payment and closing costs. Tell us about MSHDA, what it is, and how it can help out home buyers.
Sure. So MSHDA is it's a loan in the state of Michigan, and it can help first-time home buyers, and that can be classified as anyone that hasn't owned a home in the last 3 years.
Okay.
And there are the two different programs that we're going to talk about: the 7,500 and then the MSHDA Step Forward program.
Okay. And I think one of the misconception out there is how we kind of define a first-time home buyer. It's not literally a first-time home buyer. It can be, and most of the people who use that program probably are first-time home buyers, but as long as you haven't owned a home in the last 3 years, they qualify, or they kind of classify you as a first-time home buyer, correct?
Exactly.
Okay.
And then there are some areas, all of St. Clair is considered a targeted area. Mount Clemens and Harrison Township are considered targeted areas, and you don't have to be a first-time home buyer at all. You can be a move-up buyer buying a more expensive home and still use this program.
Okay. So MSHDA's been around for a while. It's been around for several years. You could get that $7,500 benefit if you qualify to help with closing costs and help with down payment. But recently they kind of announced the Step Forward program where in certain areas you can get up to $15,000 of assistance. Talk about the Step Forward program a little bit.
Yes, so that program is just certain zip codes that you can use this program in, and you can use that $15,000 to go towards your down payment, your closing costs, your prepaids. The customer basically just has to have 1% into the transaction.
Okay.
And $15,000 is a lot of money, so what you can also do is use that to put a larger down payment down, so that may help them qualify for a more expensive home.
Okay, so if you exhaust your down payment and closing costs, but there's still money left over in that $15,000, you can actually essentially buy down your principal balance, so you're borrowing less.
Exactly.
Okay, so it's essentially in Macomb County, the areas that you can use the $15,000, Centerline, East Point, New Haven, Roseville, and that's probably Southern Warren, the southern part. Okay, but the rest of it, you can still use that $7,500 anywhere in Macomb County. It's just if you want to use Step Forward, it's limited to just those areas, correct? Okay.
The other thing I'd like to point out is this $15,000 program, it's forgiven after 5 years. You don't have to pay it back. So it goes on as a second lien on your property. You don't make any payments on it. As long as you live there over 5 years, you never pay it back. The $7,500, you do have to pay it back when you sell the home. Okay,
so that's one difference between traditional MSHDA and Step Forward is with Step Forward, that $15,000 is no strings attached as long as you stay in the home for 5 years. It's completely forgiven. This, people just have to be aware that you do have to pay it back eventually.
You do.
But it's no interest. You don't make payments on it. It's just a number that stays there until you sell the house, whether it's 5 years or 20 years. It's still just the $7,500.
There's no
interest or anything like that, right?
Or anything like that.
Okay.
You both of these programs, you're going to qualify the same way. You have to have a 640 credit score.
Okay.
There's income limits depending on what county you're in.
Yeah, talk about that, because when it comes to like income and money in the bank, we're so used to making sure buyers have enough income and enough money in the bank. With MSHDA, it's kind of the opposite. You can't have too much money in the bank and you can't make too much money. Talk about the limits of how much those are.
Sure. So if you're going to use down payment assistance money, you can only have $10,000 in liquid assets. That doesn't count your 401k or anything like that. It's just savings accounts.
Okay.
So if you have over 10,000, then you may want to just do a regular MSHDA because that has a lower interest rate, and then you would just cover your own down payment and closing costs. So that's just important to keep in mind if they're looking to get the down payment money. You can only have 10,000 in assets.
Sure. And you know, I actually was talking to a home buyer about that the other day, and you know, she had like $30,000 in the bank, and she was kind of annoyed that she couldn't use it and felt like she was being penalized for saving money. But I mean, the intent of the program is to get the money to the people who need it the most. And I think MSHDA's point of view would be, if you've got $30,000 in the bank, you don't necessarily need our help with down payment.
With the down payment money, but you can still use MSHDA and get the lower interest rate.
Okay, and what about the income limits?
The income limits, so in Macomb County, if you have a household of 2, it's $70,900.
Okay.
If you have 3 or more, it's $81,000. And then in targeted areas, it's $85,000 for a family of 2 and $99,000 for over 3 in the household.
And that's household income. It's not just the person going to get the loan, correct?
That's correct.
If it's husband and wife and just the husband is getting the mortgage or just the wife is getting the mortgage, even though only one of them are getting the mortgage, MSHDA is going to look at the combined income of the household?
They are, and also both parties would have to be on the loan.
Okay.
And if they have any children that are over 18 years old, anyone that's living in the home that's over 18 that has an income needs to apply on the loan.
Okay, that's good to know. So, and what about, is there like a max sales price that people can't exceed?
$224,500.
$224,500. So, you know, the average sales price in those areas is well below $224,500. So you should have no problem qualifying for the step forward without exceeding that max sales price. And a lot of the other areas in Macomb County, you can find a really nice house under that $224,500. So that's not an unreasonable limit in terms of sales price. So just to finish up, I mean, this is a great program for home buyers, especially those first-time buyers, to kind of minimize their out-of-pocket expenses. I know most of the deals that come across, you know, that I'm at that have a MSHDA buyer involved, most of them are coming to the table with 1.5%, maybe 2% of the sales price out-of-pocket total. So if you're talking about a $150,000 house, you're only having to come to the table with $2,000, maybe $3,000 at the most, and you own a home. So that's a great opportunity to own a home with minimizing your out-of-pocket costs.
The other thing I'd like to point out is you can do FHA, conventional, rural development, veterans loans, all with this MSHDA program.
Yeah, it's nice because it gives you the opportunity to use maybe a conventional mortgage instead of FHA. And there's, even though you and I don't really buy into it, there's this stigma with FHA loans out there. So it may allow a buyer to use conventional financing and look really good in the eyes of the seller while still getting that down payment assistance, right?
Yes.
Okay. Yeah, so if you guys have any questions about MSHDA, reach out to Crystal or I. We'll be happy to answer your questions. If you're watching this on Facebook, drop a comment below and we'll get back to you. If you're watching this through email or some other means, just respond to the email or get a hold of us, and we'll be happy to answer any of your questions about MSHDA. Thanks a lot. Have a great day.
Thanks.